Hello everyone, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and if you're anything like me, you are scratching your head going, what on earth is going on with these markets? We had a CPI number which was fantastic. We had a PPI number which was like Macaulay Culkin face melting awesome because it was zero. No increase in prices for producers. That's excellent. Markets should do what? They should soar to the upside. What'd they do? They tanked. At one point, the S&P was down almost 5%. Luckily for Friday's session, recouped some of those losses, made it somewhat palatable. All I know is this week brings us some major news as well. So we'll start there with our earnings calendar. Honestly, this week's earnings calendar is rather boring. As you can see here, we only have 494 companies reporting earnings. There's nothing on Monday. On Tuesday, we get XPEV, that's XPeng Motors, that's another EV startup, and TME, that's Tencent Media. Again, these are both Chinese firms for those of you playing international markets. Then we go domestic with General Mills. Gotta love how the commodity prices might be impacting General Mills' profits. We also have on Thursday your biggest day with Nike, Micron Technologies, FedEx, Lennar, FactSet Research, and Darden Restaurants. And finally, Friday brings you Carnival Cruise Lines and another EV company out of China called Nio. Now, of course, these earnings may have an impact on your portfolio if you're holding any of those. And I'll be honest, we've seen some wild swings with regards to earnings this year. Whether they have beats or misses, it's the forward guidance that's just been crushing some of these companies or causing them to soar. So keep your eye on these names. They may impact your portfolio. Now, let's dive into some more economic data, at least bigger economic data. Retail sales is what we're going to dive into next. And as I always mention, the U.S. market is driven by consumption. Monday at 8:30 a.m. Eastern Time, we get the retail sales number. Now, this one is very important. I said very so many times. Why would I say very so many times? Well, we have a trade war going on. Right now, we've got 25% tariff on Canada, we got 25% on Mexico, 20% on China. Now the European Union's taxing things, saying, oh, we're going to tax your bourbon, and now we're going to add tariffs of 200% on every alcoholic beverage. It is this crazy chess game, which is causing an unbelievable amount of uncertainty in the markets, which, in my opinion, is why we've seen the S&P drop 10% over the past 3 weeks. Now, retail sales have not really been hit by this yet, but as the months go on, I do expect to see retail sales numbers impacted significantly, particularly for those of you who are buying into companies that have major international business. So what's our current number? Right now you can see on your screen we have negative 0.9 for retail sales. That's bad. That was your January reading showing a significant contraction. What about for February? Expectations are we're going to come out at a positive 0.7. Now that red arrow you see on your screen goes back to November's reading, which was a 0.7 as well. So good news here for those of us looking at the retail sales numbers, hoping for more consumption, but keep your eye on this one. And of course, on Monday Morning Must Knows, we'll talk about this over the next 3 to 6 months as these tariffs may start to impact retail sales, and that could give you more an indication as to how it might impact the overall economy and therefore the markets, giving us a little bit of a head start to position our trades. Now, let's go to the big stuff, right? Retail sales is important, but it's the cost of capital, money, that makes the world go round. We have central bank announcements this week, and of course, all eyes are going to be on the U.S. Central Bank. The Federal Reserve will be coming out on Wednesday for its meeting, and I am pretty excited about this one. Not because of the announcement itself. That's going to be Wednesday at 2 p.m. Eastern Time. Of course, right now the expectations are that we're going to stay at 4.5%. No shocker there. And then the big stuff, the press conference happening at 2:30 p.m. Eastern Time. That's 30 minutes after the rate announcement, and this one is incredibly important. It's important because right now the odds are showing like a 99% probability that they're going to stay the same, and I think that they will stay the same at 4.5%, so that's not the important piece. When Jerome Powell is in front of the media, he will read a pre-recorded speech, and then they will ask questions. And Steve Leisman of CNBC always asks great questions. Honestly, I think that Steve Leisman is an extension of me when he's asking these questions, because this is stuff I want to know, like, what were the other voting members thinking? What's the probability that we're going to have more rate cuts this year? Right now, there's a 37% chance that we're going to see 3 rate cuts by the end of the year. Crazy, especially with all the inflation talk going on, with all the tariff wars and everything. Who knows where it's going to go? But if Jerome Powell slips up during that press conference or says something the markets like or don't like, you could get wild swings up and down. So be very careful when that announcement comes out. Now we'll move on to more central banks. So of course, the biggest one is going to be the U.S. Central Bank, the FOMC press conference on Wednesday. Well, we actually have 3 more this week. 3, count them. Starting things off with the Bank of Japan. Now, the Bank of Japan has a rate announcement tentative for Tuesday. Right now, they're expected to stay right where they're at 0.5%. Remember, Japan was at negative 0.1 for a long period of time, and they have been slowly increasing, which is crushing the carry trade. Moving on to your next one, that's going to be the Swiss National Bank. They're expected to go from 50 basis points down to 25, meaning a 25 basis point cut, getting down towards those zero numbers, and that will happen in the wee hours of the morning. So for anybody trading the Swiss franc, that's going to be Thursday at 1:30 a.m. Eastern Time. And finally, moving over to the Bank of England, we've got them staying the same. Thursday, 5 a.m. Eastern Time, they are expected to stay right where they're at 4.5%, pretty much following the lead from the United States, the old keep up with the Joneses attitude. So there you have it. You've got some pretty big news. Earnings isn't that important. Retail sales, to me, is not that critical this month, but going forward, I think it increases in importance to show you the demand aspects of the United States economy and how these tariffs might be impacting retail sales. But then the real big fireworks, really Wednesday is the big one with the FOMC. You got the Bank of Japan on Tuesday. Thursday, you've got Swiss National Bank and the Bank of England. So a wild week, particularly for you Forex traders. Love it. Hope you guys have a fantastic trading week, and we will see you next time for Monday Morning Must Knows.